Hey, everybody. Welcome to the last few weeks of 2024. Tyler is joining me. This is probably going to be our last recording session for this year before holiday breaks and all that. And we have some good ones for you. We're going to talk about some of our favorite companies. Today, we're going to do Sun Communities. Ticker symbol is SUI. One of the more interesting cases because been a kind of a volatile real estate stock. And we know the real estate sector has underperformed lately, but Sun Communities is actually down by 42% since the start of 2022. We're going to dive into that in a second. Before we do, please take a minute and click subscribe to my channel if you don't already. And be sure to check out the link you see on your screen, fool.com/Frankel, for the top 10 stocks to buy right now from the Motley Fool. They're our sponsor and the best way to support this work we are doing on YouTube. So if you're not familiar with Sun Communities, I'm going to give a quick overview before I kick it to Tyler. Um, it is a real estate investment trust, and they're a residential real estate investment trust, but in a kind of different way. They don't own apartments. They own three different types of properties primarily. They own mobile home communities that people live in. They own RV communities that are some people have some permanent residents, some kind of transient population that people traveling, and they own marinas in the United States and in the and they also own some properties in the UK that are called holiday parks, just because they have different names for things, but they are mobile home and RV communities. So that's the general idea of the business. They make some of their money from selling homes, selling services, through dining and entertainment at their various properties. But like most real estate companies, the majority of their money comes from rental income. About 90%, 89% in the most recent quarter of their income was from rent. To be considered a REIT, at least three-quarters of your income has to be from real estate, and they definitely qualify. There are two big issues with the company right now that I'm sure Tyler could expand on a little bit. Number one, there was a pretty legitimate short report on the company recently. Nothing too crazy damaging, but just kind of created some trust issues. And second, the company kind of overspent during the pandemic, and as a result, they're having to do a big restructuring and cost cutting initiative right now. So there's kind of the overview. Tyler, what are your thoughts on Sun Communities right now?
Sun communities for me is kind of one of those hard to pin down sort of businesses because I think if you think about the bones and the thesis of the business, where you're like RV parks, mobile homes, marina slips, it's actually a pretty nice business. They tend to be in terms of recurring revenue, they do quite well. They can tend to grow their rents at more or less inflation or a little bit better. And, especially when it comes to things like RVs and marina slips, which are a little bit more discretionary income, despite the fact they are discretionary, they tend to be a little bit more resilient. Like, you're if you have a boat, you have to have a marina slip most of the time for it. So that sort of thing. And so you can kind of see the thesis working here. And if you go through their investor presentations, there is a lot of things that, you know, management presents to you that look good, right? They talk about, growing net operating income at very high rates. They talk about, a lot of this kind of growth at the property level that is very, very attractive. Um, Things like that. Obviously, it is a little bit cyclical, and 2024 so far has been a little bit of a down year. Management's expecting rental rates in 2025 to be about 5%, which is technically higher than decade wise, but way down from 2023, 2024, things like that. Even despite occupancy being better, net operating income a little bit lower because costs are getting higher. So that's like the story and kind of the bones, and those all seem to make sense, right? Like you could kind of build a thesis based on the ideas. But one of the things that is, I think, underrated when evaluating businesses, and I think you can agree with me, is just kind of like management execution. There are a lot of things that they present that look nice, but then there's kind of like the shareholder show me the money aspect to it. And when it comes to REITs, like, I want a REIT that is going to grow my funds from operations per share sufficiently that it can continue to grow dividend. And that's where Sun Communities has kind of really not lived up to the hype. Over the past 5 years, so just before the pandemic, Sun Communities has had a funds from operations gross of 30%, which sounds great, right? But on a funds from operations per share basis, it's actually down 7%. So it kind of goes to show there's a little like stock dilution from issuing stock to pay for properties, things like that. Your rates of return starting to decline. Things like that tend to add up. And, there have been some legitimate concerns of execution in the past year. And as you mentioned, there was a short report that talked about a lot of like nothing I like game changing. Like you're not like, oh my God, this company is going to go bankrupt because of what has been unearthed here. But it was a lot of like, management's doing a little bit of side dealing, maybe getting some like off the books sort of personal loans related to, lenders that they have and kind of using their personal influence, which it's not bad, but it's kind of icky, right? And part of the thing is when you invest in a business, you kind of want to trust that management is working for you. And when they're doing like little side deals behind your back, it's like, well, can I 100% trust you with my money all the time? And I think those have been the biggest contentions with Sun Communities and why they probably need a little bit of a house cleaning, if you will, uh, before like anyone's like, I really want to support this business and buy this stock again.
So I'll just quickly give some details about that house cleaning you're talking about. Um, so they made a couple of management changes. Their current CEO is planning to retire in 2025. They just brought back their former chief operating officer, who actually had a really good run as president, to help right the ship. And they announced a restructuring in November, and they've made some good progress. It involves getting rid of a lot of quote non-strategic assets, meaning stuff they bought in the past few years mostly and shouldn't have. Involves some debt pay down. They've paid down $450 million of debt year to date, and brought down the percentage of floating rate debt to 6%. It was over 20. So that's a good progress. One of their big strategies is they're gradually converting their transient RV sites, meaning the ones that people just pay to stay out for a night or two, to annual rentals. Better cash flow visibility, things like that. Better way to get value out of it. The number of permanent RV sites has increased 32% since 2020. This has been a multi-year initiative, and going forward, expense control is a pretty big priority. So on the other hand, they are expecting rent growth to slow from the pandemic era boom. It continues to kind of moderate, but they're doing a good job so far. But I'm on the sidelines waiting to see how this progresses through 2025, especially with the leadership changes, before I would put money into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.